The next graphic is going to give you a live example of how you can use the TTM squeeze, just having just price action at the top. And then at the bottom, you have the TTM squeeze indicator to give you more confluence and more information when it comes to what's the momentum, for that given moment. So a couple of things here to note. Here we have what? Can someone tell me what does it signify right here? Just looking at the dots. Consolidation, right? Red means a squeeze. Red means consolidation. So what does this mean right here? When the dots are green, bullish, right? We're trending, right? We're trending. There's some sort of direction. So you want to be in trades when we're trending, right? So this means that we are consolidating. And as you can see, once we got out, let me go back. Once we got out of that consolidation phase, price was able to rally and we were able to make higher highs and higher lows, right? As you can see here, just a couple of different things to note. You see how we have light blue bars all the way, right? And price is just trending. Price is just going up the entire time. So me looking at the TTM squeeze at the bottom and just looking at the bars allows me to understand whether we're trending or not, right? The first time that we see those dark blue bars, what does that mean, the dark blue bars? Let's go back to the colors. Dark blue bars mean what? Exhaustion. Great job, Vince. Yep, a pause in what? A pause in bullish momentum. And as you can see, price then started to drop, right? And then after that, we got the red bars, and that basically confirmed the bears are now in control. And then now the momentum is towards the downside, or the momentum is currently bearish. Give me a 1, give me a yes if this makes sense, and we can move on to the actual platform. Excellent.
Chris, are the green dots also symbolic of volume?
Not really.
Okay.
Well, yeah, sort of, because it's both volatility and also momentum. So it does signify that there is volume towards either the uptrend or downtrend. All right, so we got a couple of ones there. Let's go first to think or swim, and let's cover how to add it to your chart. Here I have Amazon on the daily time frame, and I'm just going to go ahead and remove all of my indicators that I have here, just to give you a brand new perspective of what we can do here, and again, how we can add confluence to our trading by adding the 9 and 21 and the other indicators that I've been talking about the last couple of months, or the last month and a half. Right, so here we have Amazon on the daily time frame. Right here, we can identify, just looking at the chart, we can identify that right here it was a time of consolidation. This right here was a time of consolidation. So again, just with my eye, I can tell, I can visually see or identify where the consolidations are at. But again, the TTM squeeze does that for you automatically. What we want to do is that we want to utilize that tool to understand how we can make money and become profitable in the stock market. So the first thing we're going to do, if you don't use MACD. I don't really use the MACD, only sometimes, only for the crossovers. The TTM squeeze adds both the volatility and momentum confluence that I need. So for that reason, I use the TTM squeeze. But the crossover on the MACD on the higher timeframes is a gem, and that is definitely key. One thing about the MACD is that it actually lags a bit when it comes to price. If we go to edit studies, I want you to type in TTM, and it's going to be TTM squeeze. From there, I want you to add selected. Drop a 1 if you have done this, and then we'll go ahead and move on. I do not want anyone to stay behind. Okay, so TTM squeeze is the study that we're going to look for. We got 2 people. I need more people to tap in. Thank you, Martin. We got Frank, Carlos, great job. Excellent, excellent, right? So once we got the TTM squeeze on our chart, that's when we click on apply and we click on OK. So let's go ahead and decipher how we could have used the TTM squeeze. There's various different ways. What do we say about the weekly and daily time frame? The weekly and daily time frames are used for what? Is it for swing trades? Is it for scalping, long term? What is it for? Right? Swings and long term, correct? So if you want to swing and you want to catch a breakout and you want to understand whether or not Amazon is squeezing on the weekly time frame, all you want to do is come to D, go to 3-year weekly, and here at the bottom, we are able to see the momentum that we have for Amazon. So I'm just going to plot a couple of different rectangles here, and I want you to put in the chat and decipher what's going on here. And again, I want you to look both at the bars and the dots that we have here. Okay, so I'm going to leave it there for a couple of seconds. You can go ahead and drop in the chat what's going on, and then from there we'll cover it together. Okay, so we have consolidation, tug of war, great job. We'll give it a few more seconds here. Consolidation pause with some bullish momentum, great job. Zoom user, great stuff. Indecision, right? So as you can see, we definitely have consolidation at this moment, right? There's a lot of consolidation, but what happens the first time we get that first green dot? What happens here? The first time we get that first green dot, what happens, right? And that's when Amazon went from 33.45 all the way to its highs of 33.73. So that's a way that you're able to understand whether or not we are currently in consolidating, and this can be actionable for you to get into a trade. Now, not every single time there's a breakout, you're going to know where the price is going. Can someone tell me what type of confluence that I have taught can you add to this chart to be able to identify that this breakout was to the upside? EMAs, great job. EMAs, right? So EMAs is definitely a trend indicator. There's different types of indicators. There's volume indicators, there's trend indicators, right? And for trend, we usually use the EMAs. And then we also have the momentum. And under momentum, the underlying indicators can be the MACD and the TTM squeeze as well. So let's go ahead and add the 9 and 21. First, I'm gonna add the 9. Let's see. First, I'm gonna go ahead and add the 9 here. 21, geez. All right, as selected, and then I'm gonna click apply. All right, so we're gonna go back to that exact same example. And here's one of the ways that you can do this. Can someone tell me at this given moment right here, was price below or above the 9 EMA? Did the price close above or below the 9 EMA? This candlestick right here. All right, so it actually closed right above, it barely made it. And we can see that we were definitely consolidating, right? Consolidation for weeks, it was terrible. The market was just terrible. We get above the 9 EMA, which this can be considered a good entry. And then we consolidate again, consolidate. And again, I want you to look both at the price and I want you to look at the bottom too. The red dots, red, 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 red. And then we get what? Light blue bar, and we get the first open above the 9 EMA. We get the first close candlestick above the 9 EMA. This right here followed along of the light blue bars and then green. This lets me know to swing calls all day. So again, this is another strategy that you can use to be able to identify for swing trades how you can actually use the TTM squeeze to identify a breakout and then use just one layer of confluence, which is the 9 EMA, to be able to identify how to swing trade. Now we of course can go ahead and add 21 EMA. This one, I think I do have the pro version. One second. If you want the pro version, let me know, because I actually have a contract with Simpler Trading and I can give you a discount for that if you really want that discount. So I put the 21 EMA and then I add in, let's say I'll put my 21 in orange. And here what I'm looking for is, do we have any sort of crossover, right? So we have our TTM squeeze. Price is now above the 21 and it's also above the 9 EMA. I'm swinging calls all day. Same thing. And again, I'm going to go to another example here. Just look at this here. Right here, we have a pause in bearish momentum. So the bars are yellow. And then we have red dots, red dots, red dots, red dots. And you can see how the price is just right. It is hugging the EMAs. It's hugging it, right? So we see consolidation, 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 consolidation. What do we see at this moment right here? What do we see here? Breakout, right? Price. Now we have a breakout of that squeeze. Price is now above both the 9 EMA and 21. The 9 and 21 crossed over. I'm swinging calls all day. And again, we are on the weekly time frame. So each candlestick here represents 1 week of price action. The amount of money you make from 1833, let's say you swung 6 months out, you're getting 3,000% returns, right? So this is definitely the way that you could do that.